A. Balasubramaniam joins us. He is Chief Executive Officer with Birla Sun Life Mutual Funds. He joins us live now. Bala, morning. Good to have you back. I guess we are in a spot of bother, aren't we?
Yeah, that's right. I think it's been a quite challenging. I think you use the word rightly. It's a challenging period. The last 2-3 weeks have been very challenging, especially since the time the RBI changed their stance on the current liquidity conditions as well as the interest rate scenario post the extreme amount of volatility what we have witnessed in the currency market. At the same time, I think many steps are being taken, which historically we have done even in the past. Whenever we have seen extreme amount of volatility setting in on the currency front, we always come out with measures which eventually has helped actually in terms of either getting back on the recovery path or bringing some kind of the balance more towards getting to a normal growth path. No doubt, as you rightly said, that's the challenging period. I think it's a part and parcel of the game.
Bala, but the question is it just the start of all the pain, or are we now at the fag end of the correction in equities?
I think difficult to put any kind of this thing that whether it's a start or end. I think the way we have been looking at, let us look at the broad Sensex level. Where is it currently? It's more or less the same level at which it was trading maybe about 4-5 years back. In that sense, it's not gone much places. Despite the index composition at this point of time is more skewed towards some of the stocks, some of these sectors, which are largely not dependent only on some of these changes that is happening in the macro, but the overall the balance sheet is strong, governance is good governance, and the business outlook remains somewhat solid. I think it's about 65% of the index weights is coming from such kind of companies, such kind of sectors. To the extent, I think it will be misnormal to look at the Sensex movements. At the same time, if you look at the broader market, if you extend that to say about 200 to 500 companies, clearly there has been a substantial fall, and which we add to that index. In any case, it trades at probably I would assume at a lower level.
Bala, in the past you've run a financial heavy portfolio. You've owned names like ICICI Bank, you've owned names like HDFC Bank in the past. Is it time now to rethink that financial position? If the core economy is under pressure, financials are unlikely to do well. Is it time now to hunker down expectations there, and are you in a mood to trim some of your financial stocks?
I think that anyway we keep doing that more with respect to the sector wise as well as on stock speaking. The sector would continue to remain a proxy on both the sides. I think if there is a significant growth that comes in the economy, definitely the banking sectors will be the sectors through which you can play. At the same time, as you rightly said, that the economy itself is going through tough times. Naturally, the banking sectors will take a hit. I think the most crucial part of all these things, the last 3-4 years, what we have realized is to pick on the stocks within that same space. At times, we may wonder that the stocks are costly, whether it is the price to book comparisons or any kind of earning comparison. But at the end of the day, I think the potential, the growth outlook for such kind of companies in relation to the other banks in the same space, mainly coming from the potential impact on the NPLs. Definitely, I think they will continue to trade at a premium. That's why I think it's been a pretty challenging. While of course we do reduce the exposures depending upon the macro changes that happens, especially in the banking and financial sectors. But at the same time, you need to also go and hide yourself in some of those stocks which will give a relative outperformance to the market.
Bala, just want to come to you on telecom. Does it seem like all the pain is out of the system and it's now perhaps time to buy into telecom stocks?
I think this sector we have been quite reasonably turned positive some time back. I think that the 2-3 of course the reasons. One, the pain which we have gone through with respect to the regulations. I think is to large extent it now is going behind the screen. And second is the telecom operators have been able to increase the tariff very marginally, which itself has got the potential of having a higher impact on the EBITDA margins. And clearly, in that sense, if you look at it, I think in any parameters, if you look at with respect to their the pricing strategy, is more or less at the bottom of the cycle. And given that kind of fact, and probably as you look forward, the probability of the earnings getting better, even if they may have to undertake a marginal increase, I'm not even saying big increase, even marginal increase could potentially have a huge impact from their overall profitability point of view. And also given the fact that some of the investments which they have been making, also I think now will begin to play in some sense add value to the overall both the revenue as well as the bottom line. And I think in that sense, if you look at it, I think in relation to the broad market and relation to the kind of challenge that we are seeing in the case of the economy, which would directly have an impact in certain sectors such as capital goods and infrastructures and financials, maybe these sectors could outperform the market.
Bala, there is a 10 on 10 consensus on IT now. Do you think IT is getting a crowded trade, or IT or large cap IT stocks still have a distance to go before they top out or before they hit a wall?
I think this is also another sectors had been underperforming the market for some time. So I think whole of last year the sectors was completely divided within the large cap names. And also given the fact that we are seeing some bit of marginal recovery in US, which might lead to an increased level of spending, which could also in some sense help actually the Indian software companies. But for of course, there are few challenges such as H1B visa quota, etc. If some of them are actually resolved, I think there is a high potential for these sectors to do better, given the fact that the scope for the companies to disappoint on the earnings is relatively lesser compared to the other sectors. Again, on a relative terms, we are assuming that would perform better than the other sectors.
Bala, you just talked about the private banking lot. What about PSUs, wherein the asset quality concerns still seem to persist? Is it time to now start nibbling into that space, or would it still be an avoid for you?
I think we keep discussing on that, and we have also been quite successful in skipping these sectors for whole of last 2 years, given the fact that rising level of NPAs could potentially impact the valuations of these banks. Having said that, I think with the recent fall, the entire public sector banking space has come down to a level of about 0.6 to 0.7 kind of book. At the same time, we are still debating and discussing about to what extent the current economic slowdown in the growth would get extended, and probably what could be the level at which we'll probably see the peak of the NPA levels being recognized in the market, especially from the infrastructure space. I think once we see some kind of visibility, we will probably look at some kind of inflection point around that. And also having said that, in the recent volatility, especially related to the interest rates, in some sense would have some kind of act as a hanging sword for the financial sectors. During this period, maybe there could be some opportunities purely on the basis of the balance sheet strength, and purely on the basis of how some of the books are being built, which could not potentially become NPAs. If some of the assessment, if it is done, I think that's our job to keep doing that on an ongoing basis, then there could be an opportunity for a nimble-footed approach in this sector.
Bala, as a fund manager, are you happy to pay a strong premium for growth and earnings visibility, because that's what markets are doing? Wherever visibility is strong or wherever visibility is half decent, those stocks are really priced to perfection. Are you happy to do that?
I think the other way to look at is, while what you are saying is that's the way the markets have been behaving. At the same time, there has not been any appetite among the portfolio managers to live with volatility of earnings and a bit of uncertainty in terms of an outlook. And wherever the visible growth outlook is not seen, even if the growth was marginally lower, but it should not come with some kind of volatility in terms of predicting that. As long as that doesn't, as long as it's not there, then even if it comes at a slightly premium in terms of the valuations, probably I think we would still continue to prefer that. The other area where we still have do not have much appetite, wherever there has been in some sense even a marginal issue related to the governance or maybe some of the policies could potentially impact the business outlook. Again, the market do not have appetite, portfolio managers do not have appetite to own such kind of stocks, mainly with an intention actually to protect the downside. And the third point, which of course we keep discussing and internally debating, while one has to continue to focus on the allocations to the sectors, allocation to the stocks, and pick the right set of stocks to the bottom-up approach, at the same time, at many point of times, we keep debating, despite valuations being attractive, should we avoid, what are the stocks we should miss, and how do we ensure that you protect the portfolio volatility by focusing on what to miss as well.
Bala, what about FMCG? Much unlike what we saw up until last 2 weeks, wherein these stocks were sitting at fresh highs, we've seen some bit of correction. Do you think it was high time that some of these overvalued stocks saw some profit taking, or do you think this is just a technical aberration and these stocks will again be on the up move soon?
I think the way we read this is while the sector do have high potential to participate in the large pool of the consumption story that is on which the country is being driven, and the valuations, as is known, is actually stretched beyond there may be the long-term average. Having said that, at the end of the day, till such time we see actually a clear visibility with respect to the growth coming back, with respect to the investment coming back, and with respect to the interest rate being somewhat stable, which could probably kickstart the overall economic growth back to the 6.5%. I think till such time we see some bit of very clear action around this. Some of these sectors such as FMCG may remain costly and may remain in some point of debate. At the end of the day, the market is willing to pay a premium for stability, high visibility, and a very strong balance sheet, and relatively higher cash flow, which enhances actually the companies to reward shareholders in the form of high dividend payout. And that's the way I think the markets have been behaving. I think our view is we'll still have some time to go to change the view on these sectors. Having said that, within the same sectors, the way we have been picking up is relatively the companies has high potential in terms of growing better than some other companies in the same space. So that's the way we look at the allocation of the sectors.
Bala, whereas at the current juncture, it is very easy to make a very bearish argument. Nothing is working. Growth is a problem. Rupee is not stable. Earnings are patchy. But, a lot of good things have also happened. The fiscal deficit is well under control. Government is committed to fight the CAD. For most of the, core sector, for most of the IT sector and at least exporters, earnings are looking okay. So do you think at the current juncture, one should also focus on the positive things?
I think one of the points which we were discussing at our AMC a few days back, I think the day the RBI took steps to control rupee dollar movement by increasing the MSF rate to about 10.25%, very next day we saw a series of announcements coming from the government of India, especially with respect to the FDI in telecom and FDI in few other sectors. And clearly that we see actually is something which we as a country are now taking steps in terms of attracting the FDI investment to certain sectors. Then second is, as you rightly said, the fiscal under control. At the same time, there are steps that are being taken actually in terms of increase the revenue. The other factor is, despite all the noise being there, I think we have stuck to the gun of adjusting the petrol and diesel prices to the crude oil prices that's prevailing in the global market. I think we have been continuously doing it both on the upside as well as the downsides. I think that reflects the commitment of the policymakers to stick their neck out and see to it that some of these discipline what we are setting for ourselves, whether it is respect to bringing in a balance in the fiscal or bring in some bit of balance in the orderly movement in the case of currency, at the same time without increasing the interest rates through the policy rates. We're looking at different ways and means by which even the reversal could also become easier. I think these are some of the things which are pretty good. And the last, of course, with respect to the economy is good monsoon. I think we have one of the best monsoons ever in the last 20 years. which I presume would have a huge impact on the agricultural growth in the second half of this year, which will also act as a big positive for the inflations, the higher income in the hands of the the public. At the same time, increase the food grain supplies would actually have a larger benefit for the country as a whole in terms of increasing the income in the hands of people.
Bala, so give me an idea or a group or a business where are you allocating disproportionate amount of money? Where do you think valuations are looking attractive? Yes, in the near term, there could be some degree of uncertainty, but eventually that sector, that stock or that business will make money. You can be specific here, you can give me a name, you can give me a theme, you can give me an idea. I'll keep it open.
Yeah. I think the way we have been looking at Nikunj in terms of portfolio allocations, and clearly in the financial services space, we have been more stock specific with respect to the housing finance companies in the same sectors, or within the private sector banks. We have been extremely choosy in terms of what stocks to own in that sectors. Second, we also increase the allocation to the telecom sectors. Of course, obvious there are only 3 names in that sectors. We have actually increased exposures. Second, we also increased exposure to the energy sectors, given the fact that visibility in that sector is relatively higher than some of the recent past. And the other sectors where we have remained overweight, we continue to believe the sectors would deserve a higher weight in the portfolios, which is the pharma space.